Good evening. This is Eric Mashinsky, and welcome to a quick video chat tonight. It is May 20th, 8 p.m., and I'm going to try to keep this brief because I've already tried to record a couple of presentations, and these can get a little long in the tooth, and I know your time is valuable, but I thought that jumping on a video call may be a little bit more efficient. Those of you that have been with me for a while or new subscribers, many of you are what would be classified as an accredited investor or an institutional investor that is interested, and many of you have expressed so, deal flow in private placement opportunities and other things where it's only appropriate for the accredited investor community. I have an opportunity tonight to give you a quick overview. I am on the board of directors and also an investor in equities.com. Many of you may be familiar with equities.com and have used it for financial news, social networking. I have brought into the company since late 2013, I believe, a number of investors. We've financed the business to the tune of just under $5 million to get the business to this point. And it's a very exciting situation to me that I wanted to share. The company is right now in the middle of a $2 million round of financing. It's a private company. It's a 50-cent price tag, which is a $33 million pre-money valuation. And we've got some good momentum in the raise, but there is room for new folks. This company is exploding with growth. And before I get into some of the specifics with the numbers on subscribers, revenue, and some of the folks involved, I'll just say that things are changing in the financial landscape, the investment landscape. You're going to see things, I think, evolve very, very rapidly from here on out because of a couple of things. Number one is the socialization and information flow that moves at the speed of light. Individual self-directed investors really don't have a disadvantage anymore to the investment banks and broker dealers. In fact, we just don't need them as much as we used to. And that's going to continue to morph into a situation where more and more businesses are going to get their financing directly from the investor. And that's the second part, which is the Jobs Act that was implemented back after 2009 with the financial meltdown as a way for U.S. businesses to raise capital easier. They essentially put it into two parts. One was that it opened up general solicitation to accredited investors from businesses or funds, as long as you're accredited over $200,000 a year in income, $1 million in net worth minus your home, you could be solicited with a specific deal. In the past, that wasn't the case. I couldn't, as a financial advisor 5 years ago, just start to market and advertise a deal or an idea. It had to be appropriate. It was actually called the Know Your Customer rule, which has been abolished and now opens up online, TV, radio, you name it, advertising for opportunities directly to you. And you're going to see a lot more of this in the future. But what that's done is it's opened up a very, very interesting sector in the crowdfunding space. The later stage deals where you can get access to the Ubers and the Facebooks before they go public, vis-a-vis a secondmarket.com, a shares post, which was bought by NASDAQ, all the way down to the startup stuff. And we're not talking about the Kickstarter type of projects anymore. These are more along the lines of crowdfunder.com, Seed Invest, where you have some of the earlier to middle to late stage venture capital opportunities that are aggregated on a platform of accredited investors. And then we, the accredited investor, get to go kick the tires and decide what we want to invest in, without any investment banks or any intermediaries other than the platform. That is opening things up considerably already. But what's next is next month, I believe, the SEC has already approved back in late March a blockbuster law with regard to Regulation A financing. And really what this did was it opened up financing directly from these companies also to non-accredited investors. So for the first time ever, it's not just the rich people that are going to have access to private placements and alternative investments. It's going to be the little guy, and the little guy is actually the largest pocket of available capital in America. These are the people that make 100 grand a year, 90,000, $85,000 a year. They have some investable assets, but they can't afford to put 100 grand into a private placement, but they can't afford to put in 10 or 20. And the law actually is going to allow them to put up to 10% of their net worth into any one opportunity. And companies are not really restricted as much as I thought. They're going to be able to raise up to $50 million from non-accredited investors, as long as they have audited books and some other criteria that they meet. So we're talking about a big deal, and this is going to really just continue to increase the socialization of investing in finance, in my opinion, to the point where we've actually got validation of this. I'm looking at a Goldman Sachs report that some of you might want to check out for holiday reading this weekend. It's called "The Future of Finance: The Socialization of Finance." It's the subtitle. It's a 3-part series that Goldman wrote in March about these very topics and what's happening and what's to come. I also stumbled upon another report recently by the Boston Consulting Group, another very reputable group of folks via research. It's called "Adapting to Digital Advances in Capital Markets." And this is also speaking to these themes, and really they all affect, and equities.com is in the center of it. Equities.com is looking to be the LinkedIn or Facebook for investors on a social level, and a very robust resource in terms of information by thought leaders, newsletter writers, folks just like Seeking Alpha, if you're familiar with that. There's a very robust community on equities.com right now that writes about the markets and specific companies. It also has a component of a market, which is where public companies and private can communicate directly with their shareholder base through the network on equities.com. And we've got a lot of interesting data as well. So there's a hybrid of things going on at equities.com. Most of the money is made via advertising. But guess what? At the end of the day, all of these companies, whether it's investment banks, hedge funds, private businesses that want to raise money, who has the keys to the kingdom? It's the one with the actual investor traffic and subscribers. And equities.com has been exploding with growth since I got involved. If you look at just in March, for example, just to give you an idea of what's going on here at the business, they had 400,000 plus unique visitors, 5.4 million page views. We're up to just under 100,000 active subscribers. The number is around 80,000 actually. 1,500% traffic growth since January 2014. So this thing has really just been exploding in growth. Part of the reason is because we've got some very capable management that is in place here. We were able to recruit as new CEO Enzo Villani. If you look at Equities brand name back in the day, it was founded by David and Jonathan Bernard, who were the head of Equities magazine, which goes back the brand to the 1950s. They ended up launching the digital component about 4 years ago. And then last year, as the board of directors formed with myself and a large investor, Bob Koppel, we were able to take a look and recruit Enzo, who launched the NASDAQ Global Corporate Solutions Group, completing 2 acquisitions in 2006. It's the fastest growing business still within NASDAQ and counts for almost $500 million in revenue for the exchange group. Enzo is an acquisition guy, $400 million in acquisitions for private equity in the investor communications industry. He spearheaded the recent acquisition of equities.com of VantageWire, which we purchased late last year or early this year. Very robust investor community out of Canada. Many of you up north will know who they are. We have a very capable CTO that came on after Enzo, Michael McDonald, who was 15 years at NASDAQ, CTO of the Global Corporate Solutions Group as well. worked with Enzo, over 150 on his staff when he left last year. Also had a startup called Weather Underground that he sold to weather.com. I believe that was a big hit for him. But also, Enzo was able to attract his mentor, Alfred Berkeley, to our board of directors. Al is the former president and vice chairman of NASDAQ, as well as the former chairman of the World Economic Forum U.S. delegation. Now we're talking Davos, very high caliber, significant pedigree individual. So that's the type of stuff going on at equities.com. This is one of these opportunities where I just wanted to kind of jump on the video, give you a snapshot of thoughts so that hopefully it comes through a little bit in terms of my enthusiasm just versus typing out the story. I've taken 10 minutes up. I'm going to wrap it up in 30 seconds and say that equities.com has already filed an S1 to go public. That happened last year. A bulk of that work, the cost, the Q&A with the SEC is finished. It's really at this point a matter of when the company chooses to pull the trigger and go effective. We're targeting a Q4 or Q1 2016 IPO. And right now at 50 cents, I would consider this, even if it's within 12 months, more of a later stage situation because of the liquidity event that's upcoming. The beauty of the deal is that we will not have trouble finding underwriters and investment banks to get involved. And the reason for that is because we have, 500,000 investors coming to the site each month, and they can finance it. So I think we're going to have investment banks salivating over this deal because they're going to be able to process hundreds or thousands of new accounts that we bring to the table. We can help those investment banks with advertising. We can create quite a buzz around this initial public offering, and we can raise most of the money ourselves. So it's an exciting situation. We are right now only open to accredited investors. I don't believe we're going to open it up to non-accredited even when it goes that way, but we have a very low minimum, $10,000 to invest, upwards of hundreds of thousands if it's more your speed. But if you have interest, please email me, eric@equities.com, or eric@phenomventuresllc.com. That's PHENOM venturesllc.com. I can send you the PowerPoint executive summary, subscription documents, wiring instructions, and if appropriate, an introduction to the CEO for more information if you have questions. And if we have interest, please let me know if you would benefit from a conference call with the CEO before deciding to invest. If we have a handful or two of folks that are interested in that, we will schedule that after the holiday. Thanks for listening. Have a good night.